And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to The Money Show tonight. I've got to tell you, I have so much curiosity about how events around Kenny Fihla played out over the weekend. He was, until literally this morning, when Standard Bank put out a stock exchange news service announcement, he was the deputy CEO at Standard Bank and presumably kind of first in line to be CEO one day. He's resigned now and he's going to be the CEO at Absa. I mean, who did he phone first? How was he even approached? Who did it? So many questions around all of this. So many of them very, very interesting. We'll probably never know the full story. Maybe in 10 years, someone will write a book about it all. Absa, as you know, have had some issues around the position of CEO. There's Ari Rautenbach. Before him, there was Daniel Manele, who'd come from the Reserve Bank. You would think, considering the track record of Kenny Fihla, this is a long-term solution. Still, I can't help but feel people at Standard Bank probably really quite frustrated and perhaps even more than that, maybe even irritated or, gosh, angry, actually angry about how all of this has played out. They did say in their SEN statement they have a good leadership pipeline. I did wonder if there was a little bit of a dig there, but probably reading too much into it. Well, other news today, IBEX, they took over the assets and liabilities of Steinhoff, blocked, their subsidiary Ainsley blocked and stopped by the Reserve Bank, as I understand it, from trading their shares in Pepkor. It's a large number of shares, over 500 million shares. It does tell you, of course, what's going on and how there are still so many investigations around what happened in Steinhoff and how difficult it is to know what actually happened. We'll get more, of course, on that as we go through the program together, you and I. And then just a note around online betting, online gambling, online gaming, if you prefer to call it that. And that's really propelling SunBet to help Sun International get quite strong results. There is, I think, at some point going to be a national discussion around the huge boom we've seen in online gambling. And there will be groups who will say that actually this is very good for the economy. The Economist, the magazine, the newspaper, they had a big story about it a few weeks ago. On the other hand, of course, in a country like ours, where you have such huge inequality, there will be questions around whether this is the kind of thing that we should encourage. Should so many online gaming portals actually be open? And yes, they'll all be regulated. They'll all go through the various provincial gambling boards. They'll do what they need to do. I'm not making any comment about their legality. I'm making a separate conversation, a separate comment about the possibility of a discussion about morality. And we'll put this to the CEO of Sun International. But if there is a feeling that poorer people are being taken advantage of, well, a corporate could pay the price if that were the feeling. Maybe it's not the feeling at all. I don't know if you have a strong view on the issue around gambling. 011 883 0702 and 021 446 0567. Voice notes this evening on 072 702 1702. But plenty going on. A very busy start to the week on The Money Show tonight.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, the ongoing transition away from voice phone calls to WhatsApp calls, very obvious today from MTN's results. In South Africa, it says on outgoing voice revenue dropped by 5.5%. Service revenue was up by 3%. Fintech revenue up by nearly 47%. But overall, the MTN group as a whole reporting service revenue across the group was down by 15%, but on a constant currency basis was up by nearly 14%. And of course, this really illustrates some of the problems some countries on our continent are having with their currencies. The group CEO at MTN is Ralph Mapita. Ralph, good evening to you. Thank you so much for joining us on The Money Show tonight. Your industry is changing quite rapidly. It has really been changing since it was created. How quickly are you seeing people moving away from making normal phone calls on your network each time to using their phones to make WhatsApp calls? Some of those are on your network, but some of those are on Wi-Fi networks.
Yeah, good evening, and good evening to your listeners. This is a fast-evolving industry, and as you say, with each generation of technology, there are some shifts, and we're seeing a move, from voice to data and other services increase with each evolution of technology. I mean, in our results today, we show that overall across the whole portfolio, voice, grew by 0.5%. But actually, when you look at data, just under 22% the fintech services under just under 29%. So there's a substitution for voice for more usage of data and also other services such as financial service. So there's a big evolution, and we're just positioning ourselves to be able to capture the revenue opportunity, through that evolution. And even as people move to WhatsApp calling, we still remain, very relevant as operators.
No, sure. I mean, I do wonder, in some cases, communication is almost free. A voice call over WhatsApp is almost free for many people around the world now. And it doesn't matter where you are, the cost of communicating with someone is the same.
Yeah, that is true. But Stephen, what you're seeing more is what are people spending their time on? It's not so much messaging, it's consumption of data services. Whether they're down, watching streaming a movie, and other forms of being online and accessing the internet. That's where the real volume. And we showed in our numbers today that we're seeing data traffic growth year on year at about 33%. People just using more and more internet services. So whilst voice callings, there is some substitution with these other messaging platforms, that's been compensated to a large extent by the use of data and the various services that sit on top of the data, gaming, music, etc. So that's where the growth is, as well as on the fintech services as well.
You've been affected as a group by currency volatility across several countries, Nigeria, of course, one of those. It must make managing the group at the moment a little bit of a headache. Do you expect the currency situation across Africa to remain as volatile as it has been in these results?
Yeah, look, the Nigerian results or the Nigerian macro, we saw it coming, to be clear. When President Tinubu announced the structural reforms when he came into power in May of 2023, it was clear to us that the liberalization of exchange rates, removal of a few subsidy, was going to have some pain for a couple of quarters. And so that pain did come. But as we got to the back end of last year, we started seeing currency stabilizing, we started to see inflation abating, and then, we'd been in engagements around the need for a tariff increase, and all of that has come. So as much as we've gone through a painful period around Nigeria, we're very constructive, and we are seeing, really good growth. We're anticipating to see good growth, and Nigeria beginning to contribute back towards earnings and as well as to cash and dividends in time to come. So, we operate in emerging markets, so we do anticipate these things happening from time to time. We've got a growth investment thesis, and there are some risks, and we have to navigate those as we pursue the growth.
The situation in Sudan, the civil war there having a huge human impact, but having an economic impact too. Are you able to provide regular services? I presume some of your sites are switched off, and in some cases it may depend on where the conflict actually is sort of that week or that month as to what service you can provide.
No, absolutely, Stephen. And the situation, in Sudan is really concerning and worrying. It's not something that, the globe, people across the world are paying as much attention as they probably should be because there's a significant humanitarian disaster there. And as you say, there's some areas where we actually can't go, even to where we've had sites that have been damaged, and then particularly in the Darfur area. But between Port Sudan and Khartoum, we've been able to start, getting our network back on air. The back end of last year, in the first couple of months of this year, we've been able to get sites back on air, generating revenue, 200 sites back on air, beginning of this year. But still, it's a very challenging environment. It's not simple, but, we have a license and a responsibility to keep communication going. And we're doing the best that we can. But to your point, the conditions there are, quite challenging to operate in.
You're an international business, and what happens to international trade will affect you. How worried are you about the issues around the US and President Donald Trump and tariffs? That could well affect the value of the dollar, for example, but all sorts of things could come out of that will have an impact on any business, and particularly a business that's as international as yours is.
Yeah, look, the global macro, I always say to my team, you've got to understand the geopolitics and the global macro to manage locally, because, it either has direct or second-order effects that impact your markets. And we'll see, what these tariffs do kind of globally, and will they transmit into higher inflation or exchange rates. I think in the near term, the area that we're kind of zooming in on is trying to understand the impact in several of our markets that rely a lot on aid. So there's a bit of a global pullback on aid, either from the US or in some parts of Europe. And there are lots of programs that have been dependent on aids, and nation states are going to have to step in that gap, let's say, for Pepkor, which has been supporting people with HIV, etc. So the near term, I think the aid pullback in several of our markets, not all, will have much more of an impact, and governments will have to step in there, and that may mean a little bit more of a tax burden also for corporates like ourselves.
Ralph Mopita, thank you very much indeed. The Group CEO at MTN.
702. Stephen is on X.
At Stephen Grootes.
Confirmation from Sun International today. Its earnings up by over 10% in the year to the end of December. The big boost coming really from its online betting business, SunBet. It grew its revenue by over 60%, but also seems quite a nice recovery underway in the tourism market. Anthony Leeming is the CEO at Sun International. Anthony, good evening to you. Your revenue from rooms and from food and beverages, that was up by 10%. Are you seeing a lot more spending by people and maybe a lot more people in your resorts?
Hi, good evening. Good evening to your listeners. Yes, I think our occupancies have been good, and it's translated into obviously better improved revenues, well on the food and beverage side. We've also managed to get some nice rate growth on the rooms, particularly at a place like the Palace, where we did a really good refurb a few years ago, and we're starting to see that benefiting us.
Where are these people coming from? Are they South Africans who have a bit more money than they used to have, or are they people from other countries?
Look, it's a bit of both, but obviously local leisures remain very resilient and pretty strong over the last couple of years. I think obviously given the value and the cost of travelling overseas nowadays, more people are staying at home, and Sun City is our ideal destination. Into Cape Town, however, at the Table Bay, we really experienced, we're back at pre-pandemic levels with very high occupancies from international guests. So it's a bit of a mix. I think corporate business has improved, and certainly in the Santa node, we're sort of back at sort of pre-pandemic levels or close there too. So things are definitely looking up on the tourism side.
A big boost to your revenue from SunBet, your online gambling portal. I mean, there's a big online gambling boom that we're seeing at the moment. How big do you think this business is going to get in South Africa? Clearly a lot of room for growth still.
Yeah, look, we put out long-term projections. We believe by 2028 we should be doing at least 3 billion in revenue, probably close to 1 billion rand in EBITDA at that point in time. And so far we're meeting or exceeding our expectations, and I think there's still more room for growth for us. Yeah, we have a great brand, and I think leveraging off our urban casinos and our customer base, we managed to secure quite a lot of loyalty from our customers that stay with us, and fortunately it's working very well for the group.
I presume it's quite profitable. I mean, the metrics of it must be very interesting.
Yeah, we managed a 31% margin. I think the key issue here is quite a high variable mix with your game providers and gaming taxes and VAT. And then you have your marketing spend, which is more significant than your land base. You'll see all the sponsorship of teams and above-the-line marketing, which is not the cheapest, but that's what it's about at the moment. But still pretty good margins with not really a lot of capex to spend on the business.
I mean, we see the advertising everywhere. There are, Anthony, many people in South Africa who may be vulnerable to this kind of gambling. It can, in a way, be addictive, depending. I think many of us were brought up with the idea that the house always wins in the end. In this country, some people are absolutely desperate for money. Do you accept you have a duty to protect people who could be vulnerable?
Yeah, absolutely. I think we've actually done some international research and have looked at what the best forms of responsible gaming are, and we've started implementing that. We're also looking at some technology solutions to really identify players that have that look like they are having challenges. There are certain indicators from worldwide evidence, and you can use these to sort of really slow down gambling or warn the person. There's a lot of tools at the moment for the player themselves to restrict in terms of maximum spend and all that. But we think we need to do more than that, and that's what we're going to be doing. And we've done quite a lot in the past. But there's no doubt the industry has to take responsibility and certainly needs to do a lot more.
So just to be clear, you have your software, your systems can actually determine if someone is gambling in a way that would be dangerous for them. You could intervene in some way.
Absolutely right. I think we are implementing and looking at more software and better software that can help us with that key need. And as we sort of progress, we're certainly going to put in more and more responsible gaming measures in. There's no doubt it's needed, and I think we're not there to take someone's last rand. And certainly that's not what the industry is about. We want to make sure we behave in a responsible manner and make sure there isn't problem gambling happening.
Sure. I mean, I worry at some point, Anthony, and this is directed at sort of not at you specifically, but at the industry, but you're in front of me now. There may well be a case or some kind of public incident where someone who's lost a lot of money in online gambling and it becomes very prominent. And I think voices, they're not growing yet, and no one's done anything illegal, let me be very clear, but voices may grow for more regulation in this sector. What makes me very concerned, and I realize that this is part of an international growth in this, is that we are the most unequal country in the world, and people will be very upset, and they might be very upset at Sun International, any of the other gambling companies, if they believe people are being taken advantage of. And I would suggest that might be something you need to be prepared for.
Absolutely. I mean, there's no doubt, as I said, the industry is going to be doing more and needs to do more. I think one must remember a lot of it's a bit of an 85-15, sort of 85% of revenue coming from people that can afford more. But it doesn't matter if you can afford to lose 100,000 or you can afford to lose 1,000. It's a problem if you're losing 1,000 if you can't afford to. And obviously, if it's $1 million you can't afford to lose, it's a problem. So there's different scales and different issues here. And we certainly as an industry have to address it. And we are definitely progressing that way and already do quite a lot, but need to do more.
Anthony Leeming, really appreciate the time. Thank you. CEO at Sun International. Your views on the growth of online gambling, 011 8830 702 021 446 0567.
The Money Show.
The markets.
Tana Mongwe is Portfolio Manager at Macro Solutions at the Old Mutual Investment Group. Tana, good evening to you. Well, I got to tell you, I was not expecting the pair of SENS statements this morning. First from Standard Bank, saying Kenny Fihla was resigning as Deputy CEO, and then from ABSA, saying he was going to be the new CEO.
Good evening, Stephen, and good evening to your listeners. Yes, that was quite a surprise for us too. But I think for ABSA Group, looking at it from the investment community, it's actually a very, very big positive. Given that over the past few years, they've had a lot of changes across their leadership, and just I think having a group CEO that is well seasoned, well known by the market, and I mean his performance speaks for himself from what he's delivered as Standard Bank CIB. For ABSA, it's a massive win, and I think it just brings a lot of stability in terms of their own leadership process.
Is this the sort of long-term solution to the problems that ABSA's had as CEO? I mean, there was Daniel Manele, there was Ari Rautenbach. Some of the problems go back a little bit. Is this the long-term solution, do you think?
It is a sign in the right direction. Obviously, the issues with ABSA has predominantly been around retail banking. So someone with more retail banking experience, I think, would have been more appreciated by the market. But with that said, I mean, Kenny Fihla has got a remarkable track record within the banking division, and I think he can do quite well for ABSA. What ABSA needed more than anything is just stability across the leadership, across strategy, and someone who is just well known by the market, who can drive strategy and performance over the long term.
Thungela Resources, their results are today. Their group revenue by 16%, up by 16%. And talking up also the sort of longer-term outlook for coal.
Yes, Thungela was an interesting one. And 2 points. I mean, the share price momentum was quite strong today, despite earnings falling about 27% on weaker coal prices. But 2 things stood out for me in the results. First and foremost, I think it's the outlook for the general export market, given that in the second half of the year, we actually saw Transnet performance improving significantly. And that showed up in Thungela's results for the year. And I think that just speaks to rail reforms and improving Transnet and a better export outlook for South African miners. But secondly, despite the weaker coal prices, Thungela still delivered in terms of capital returns with a strong final dividend of 11 Rand per share, taking the total dividend to 13, and also a share buyback program. So, yeah, it just shows this remarkable resilience within their own balance sheet, and they carry on investing in diversification, in the life extension of their own mines, and and a mine that they've also acquired within Australia as well. So again, just sort of being resilient within their own operations and having a strong balance sheet.
And the market really liked it. I mean, their shares were up very nicely today, and that's, I suppose, because of all of this good news.
Absolutely, and I think capital returns plus improving rail system, rail structure for an exporting mining company, that is just golden.
Golden was the right word. Tana Mongwe, thanks very much indeed. Portfolio Manager at Micro Solutions at the Old Mutual Investment Group. Well, fascinating to watch. I know that Mike Tika was with the Minister of Mineral Resources, Gwede Mantashe, last week. And of course, Sereti was opening a new colliery in Mpumalanga. There are big conversations around the energy transition, what's happening with coal at the moment. I'm sort of reminded that I think the UK in the last year finally now has around half of its electricity production from renewables. That's solar, by the way, in the United Kingdom. Think about that for a minute.
7:02. Stephen is on the Money Show.
6 to 8 p.m.
Well, I don't know if you have a view about the explosion we've seen in online betting, and clearly there is money to be made. I mean, that's obvious. You can see it from the advertising. People wouldn't be putting that much money into it if there wasn't some kind of money to be made. I do just worry about the implications, and I was intrigued by how carefully the CEO at Sun International had thought through those implications as well, and fair play to him for doing it. But I do just wonder if at some point, and I think it was the CEO at Capitec who made this point, we need to have a conversation about this. I realize, of course, that there'll be regulations from the various provincial gambling boards. I'm sure they're following those to the letter. But in a situation where you have such disadvantage and such advantage between companies and some of the people they'll be advertising to, and you sort of never really go into doing any kind of gambling, whether you go into a casino, whether you take a bet with a friend on the outcome of a sporting match. Sundowns obviously wins, except when they didn't this weekend, or whatever it is. You never go in presuming you're going to lose. I think that's really the only way to approach kind of online gambling, is to presume that you're going to lose. That's not what the advertising will tell you. And the problem then, of course, is that you end up with people who get into a spiral. I've heard horrific stories, sometimes in other countries, where someone puts in money, gets themselves into trouble, keeps putting in money and trying to get out of it, and then you just can't get out of it. And that's the problem that we might one day have. 021-446-0567, 011-883-0702.
WhatsApp Stephen
On 072
702
1702.
Well, in a week after Mineral Resources Minister Gwede Mantashe declared that King Coal was back, Thungela Resources saying it was able to increase its group revenue by 16% year on year in the 12 months to December, including earnings from its Ensham project for the first time for a full financial year. The group also saying, though, that softer coal prices across the Richards Bay and Newcastle benchmarks, that prices are having an impact. However, it does believe there is still a strong outlook for coal in the future. July Ndlovu is the CEO at Thungela Resources. July, good evening to you. Really appreciate your time on the Money Show. Thank you. How much of an impact did softer coal prices have on your financial results?
Good evening, Stephen. Good evening to the listeners. Our story is actually quite an interesting one. Very strong operational performance. We improve productivity, we reduce costs in a softer price environment. So clearly the reduction in our earnings is really down to prices, but significantly mitigated by increased productivity and reduced costs. I must contextualize this softer prices issue, because we all talk to softer prices comparing them to 2023, 2022, and yet those were years where we had these extraordinary prices as a result of the Ukraine conflict. Reality is what we're beginning to see is a normalization of prices. And our view as a business is we want to make money at this kind of prices. So we're quite pleased with the results that we reported today.
I mean, you're controlling what you can control, and because you're controlling it well, in your view, as a result of that, you're still able to make quite a nice profit.
Correct. And that's what this game is all about. Operate safely, drive productivity. And if you see South Africa increasing productivity for the first time in 3 years, and what we've been able to do at Ensham, we took that operation producing 2.8 million tons, and we've got it in 2024 producing 4.1 million tons. All around very pleasing from that point of view.
You seem pretty confident of the outlook for coal. You point to the International Energy Agency, their research suggesting China and India are still using a lot of coal and they will for the foreseeable future. Are you seeing a lot of demand from them? I mean, are they keeping prices sort of stable at any rate?
I mean, that Energy Outlook report makes two very profound statements. One is the one you have just alluded to, which is coal demand continues to be firm into the future. But the second one is that although coal is being phased out in the developed world, the global north, the US and Europe, the growth in the markets that we serve, which is Asia and Southeast Asia, far more than makes up for the reduction in those markets. It is on the back of economic growth and the fact that they are continuing to build new power stations, delaying the retirement of new power stations, very significant ambitions by some of the countries in that region. They are looking for a secure, affordable, and readily available source of energy. And in the energy mix, coal is going to continue to play a significant role going forward.
I mean, the energy transition isn't going to stop, though. Solar energy, other renewables still coming down dramatically in price. And even in developing economies, even if they're developing strongly, price matters. And solar is becoming cheaper and cheaper. I realize it's not always on, but the transition isn't going to stop.
The transition is not going to stop. In fact, we don't believe that it should stop. We think that climate change is real, and therefore the continued deployment of renewables to take up the significant growth that we're seeing in energy demand is quite important. I mean, we mustn't forget that when economies are growing at 5%, and these are economies with large numbers of people in energy poverty, the requirement for new energy is important. AI and computational demands are demanding significant amounts of energy. We think that all that new energy should come from renewables. But that doesn't mean that coal doesn't have a role to play in the energy mix.
Mm. You got a better performance from Transnet over the period. Their railway services are presumably more reliable than they had been. Are you seeing a big improvement there?
Look, we have been very consistent, and when I reported it interims, I said that we expected to see Transnet improving in the second half of the year, going into 2025. That is on the back of the work that we've been doing together with the industry on security, on maintenance of signaling and the rail network. But in addition, they brought in new locomotives into the corridor, and all those taken together is what has delivered quite good improvements. If you look at half on half last year, H1 and H2, an almost 20% improvement in performance. And we think that is very encouraging.
Are you confident that improvement will continue? I mean, there's a lot of talk about Transnet. Lots of work needs to be done at the ports as well. You seem fairly confident for the future, considering that Transnet has such a big impact on you.
I think in the medium term, we're confident that this improvement will stick and will continue. But it depends on how far we want them to improve. Clearly, I mean, if you go back to 2018, they delivered 77 million tons. To get back there, they're going to require to spend significant capital. And without their major shareholder support, that's going to be quite difficult. But for what we require as an industry in the short to medium term, we think they're there.
July and Lawful, really appreciate the time. Thank you. CEO at Thungela Resources on The Money Show tonight.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
9 minutes now to 7 the time. Well, a fascinating set of SENS statements this morning. First came the announcement, I suppose seemingly out of nowhere, at least to me, that the Deputy CEO of Standard Bank, Kenny Fihla, was resigning. Then a few moments later, the statement from Absa that their new CEO was Kenny Fihla. Koki Koiman is Executive Director, Portfolio Manager at Denker Capital. Koki, good evening. I mean, Absa's had huge issues around the position of CEO. There was Daniel Manela. He then left. There was Ari Rautenbach. He left after a fracas inside the group. Kenny Fihla, a long track record in the banking industry. Is he the right person to take on the job at Absa?
Stephen, that's quite a direct question. And by the way, you've forgotten about Jason Quinn, who was in between,
yes.
and Rene van Wyk. And
yes.
I think Absa had about 7 CEOs in almost as many years. So Kenny certainly has a good track record, good banking experience, 20 years of leadership roles in banking. He joined Standard Bank in 2006, and over the years became CEO of the investment bank, which is the largest part of Standard Bank, and thereafter CEO of Standard Bank South Africa, and now, until his resignation, was deputy CEO of the group. So obviously he was earmarked to, as CEO, we'll come to, in terms of time frames and that type of thing later. Deputy CEO of the group, obviously highly regarded in Standard Bank, so quite a coup for Absa.
I mean, I would imagine Standard Bank must be pretty annoyed. It's not just that they've lost a deputy CEO and maybe someone they were grooming, and I know he'll go on gardening leave, but he must know, everything about Standard Bank's future strategy.
Yep. No, it's happened to see some Chabalala this morning just after the announcement was made. And, obviously he's not happy, and he admits it's a blow to the group. It does show, and I said to him that actually I think it's a feather in your cap as Standard Bank Group that you've got such a deep and big bench of capable executives, and that Absa turned to Standard Bank to try and take somebody. Look, Standard Bank's approach to banking, it's a very disciplined culture they have there. And the culture is different from Absa. Absa CIB, where Kenny did a lot of his work, operation is very good under Charles Russon, and in fact he was actually interim CEO now. So I think Kenny will have a lot to worry about initially then as to what is there that isn't firing well within Absa that he needs to change. I don't think he's going to have too much time to worry about how to attack Standard Bank, but certainly the knowledge of how it did run what it was doing in Africa, where the opportunities are in Africa, will actually stand him in good stead.
Obviously, Absa's share price has lagged behind its peers for quite some time. In fact, we spoke to Charles Russon last week about it, and I was intrigued by the timing of Fihla's resignation. I wondered if it had anything to do with the results out last week, and he sort of needed to wait for that before he could then resign and make this move public. And I'm sure one day the inside story of it all will come out in some way. But I was intrigued just because there's still a lot of work to do at Absa. I mean, Kenny Fihla has, it may be moving in the right direction. Certainly the evidence points to that. But there's a lot of work to do.
Yeah, no, indeed. Look, the big, and maybe before we talk about now, I think it is important, and I spoke a lot to Ari and also Sello, the chairman. Absa was set back during those 10 years when Barclays had control. It actually controlled a lot of things. It actually meant that staff training, executive training, a lot of things were left behind because everything was done at group level. And so the CEOs who came out afterwards had to try and rectify that. The part of Absa that did grow well under Barclays, and Charles Russon played a large role there, is CIB, but retail, the whole retail cluster, lagged. And that is what Ari was trying to fix. And, obviously between him and the board, they thought it wasn't going in the right direction. But so that is the biggest challenge. For Kenny coming in. The interesting thing is that Kenny is still relatively young, 54, so he's got 9 years. I don't know what the date will be or his age when he'll have to retire, but let's make it 63. It gives him 8 or 9 years, which is long enough to really think longer term and not have to do things immediately. It's interesting also that Sim Chabalala is 57. And so maybe there was the problem that if Sim worked until he's 63, and Sim is a young 57 and doing exceptionally well, and, so you, as a guy like Kenny sitting there and given the opportunity suddenly to go and be in charge of a bank, I think it must have been appetizing rather than just to always be in Sim's shadow.
I'm sure Sim Chabalala wouldn't mind hearing you put it like that, Cookie. When this happens, so there's movement, and there can be other movement that goes down the chain a little bit lower. So Okay, so Kenny Fihla, presumably never going to be CEO of Standard Bank now. Would Lungisa Fuzile be in the running for that now, do you think?
Yeah, there's quite a few. I mean, you've got Funeka, you've got Lungisa, you've got even Ono, although Ono, I don't think being the CFO, he should be considered for that job. He's doing an incredibly good job there. You've got Margaret Ninobo, who came from outside a few years ago and has really done. So, again, like FirstRand, Standard Bank have got a very good and deep bench. I don't know if you recall, a few months, was it towards the end of last year, FirstRand made 18 changes when they appointed Mary Filakazi, and that showed what happens in an organization when you move one person. And I'm sure that whole change took them 3 or 6 months of thinking and planning. So I think Standard Bank is going to do something similar like that. Some sort of indicated this morning that you're not going to make immediate changes. They're going to think about this and do internal discussions, do internal planning. The fact that Kenny was deputy CEO meant he didn't have direct responsibilities or direct executive responsibilities. So him not being there doesn't change things immediately. Obviously, the leadership and so it does, but I think they've got time to really think about who they'll who they'll replace him with, and who they want to think of as effectively taking over from Sim in whatever 6-7 years time.
And Charles Rosson, I mean, interim CEO, might have wondered if he had a sniff at the top job. What happens to him?
We thought as investors he was doing a good job, and I actually happened to see him on Friday, so that's all the bank results that, I see the announcement says he'll have an executive role at group level. It must be disappointing for him. He's left the job heading up CIB. He's been replaced there. Sometimes I know when Ian Kirk joined Sanlam many years ago when he left Liberty, Johan van Zyl appointed him and said, just come and as a sort of a group, at a group exec level, scout around, and I'm sure we'll find a job for you. And shortly thereafter, he was head of Santam. So there must be a lot of things in ABSA where Kenny and Charles can together identify what needs to be done and what Charles could do. But it must be a bit of a blow to him. But same as Nedbank, where Jason Quinn came in, and Mike Davis actually graciously said, look, he wanted the job, he would have liked to do the job, but he accepts it, he likes what he's doing, and he's staying. So Charles could do the same, but there can be a lot of discussions there.
Koki Koeman, really appreciate the insights. Thank you very much indeed. Executive Director, Portfolio Manager at Denker Capital. You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to the second hour of the program. Lots to come in the next little while. Just reflecting on the conversation we're having around Kenny Fihla, sort of internal banking politics. And it's the kind of thing that can happen in any organization, isn't it? You get a new boss and there are changes and people move around and there's a sort of shakeout and people move into different places as a result of one change at the top. And it happens in any institution. It's just one of those things. I'd be fascinated to see if there is any movement around, what happens in the banks as Kenny Fihla moves from Standard Bank to ABSA. Does anyone else leave ABSA? Do they feel aggrieved or not? Maybe they decide to actually stick with it and just say that that's their bank, that's sort of their home, they're going to stay there. All sorts of questions that flow from it. I'm sure you've been in organizations, businesses, firms, wherever, where you've seen the same thing happen. Sometimes you just got to put your head down, wait for the change to come. Sometimes you've got to actually stand up and embrace it. Sometimes, people do depart if they find themselves in a difficult situation. Also very interested in the online gambling issue tonight as well. More and more companies are going to be making money from this as a result. And I do think that this is going to lead to a bigger conversation. So we will, of course, be focusing on that for you over the next little while as well. And we do expect some of the gambling companies, they will be announcing results. We'll try and speak to them when and as they do. We'll try and speak to them when and as the issue comes up. And I just sort of to remind you, I did make the point earlier that what really scares me is that at some point someone is going to feel quite desperate, perhaps as a result of gambling, and the risk is they then do something extreme. And that is something that maybe the gambling industry does need to prepare for. Clearly, there are safeguards in place, and people are thinking about that very carefully. But I'd really like to hear from you on that tonight. I know 1188307002 and 021-4460567. I think there's a lot to look at there. And as a nation, in some ways, unfortunately, we may find that we're actually a lot more vulnerable to problems around gambling and online gambling than other people, than other places, simply because of our inequality. And that is actually going to be quite difficult to do, and quite difficult to sort of respond to. So how do you do it? Do you put in more safeguards? Do you try and put in other things? Do you try and sort of, do you try and say, well, actually the whole industry is going to have a lot more regulation, things like that. So, that I think could be one of the issues that, is going to come up over the next little while. I wouldn't be surprised if actually we start to see a lot more change in that industry. We'll talk about development in the next little while, and then seemed like a good day to do it. We'll get under the skin of executive headhunting, executive recruitment. Andrew Woodburn is the managing director at Amrop Woodburn Mann. He will tell you how he makes his money, how his career has been on The Money Show from 7:30.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
News from Pepkor today. The entity Ainsley Holdings has been blocked by the Reserve Bank from trading in the 506 million shares they own in Pepkor. Ainsley is an indirect subsidiary of Ibex. Ibex took over the assets and liabilities of Steinhoff when it was liquidated 2 years ago. Rob Rose is the editor at Currency, author of the book Stein Heist. Rob, good evening. I've oversimplified this, of course, but why would the Reserve Bank be blocking Ainsley from trading in these shares?
Evening, Stephen. Well, this dates back to the whole Steinhoff issue, the fraud that was uncovered back in 2017. At the time, Steinhoff owned Pepkor, essentially. It was called something else. It's called Steinhoff Africa Retail. And it relates to that issue. Now, Steinhoff sold down some of those shares, but the point is that the Reserve Bank feels that various laws are broken, including exchange control regulations. So it says, well, until we know exactly what has happened and how the laws were broken, Steinhoff and its successor, which is now this other company you mentioned, can't sell the shares. In a nutshell, that's pretty much it.
Okay, so the shares would, on the view of the Reserve Bank, the suspicion is the shares were bought through proceeds that were somehow the result of illegality or came into the country illegally?
Yeah, essentially that the dealings in Steinhoff at the time, including the purchase of Pepkor, might have involved various rules being broken, including the exchange control regulations. Pepkor was owned by Christo Vissa and Breit, who then became the largest shareholder in Steinhoff. And so it kind of circuitously went there in 2014. But it does mean that Pepkor has been sort of stuck in this with the Steinhoff nightmare, this hangover for the last 7-8 years.
If it was the case that something illegal happened, when would it have happened? Which takes us directly to who would have been responsible for that. And Marcus Jooster, of course, is no longer with us.
Yeah, for sure. Well, that's exactly it. I mean, essentially, it would be in the various transactions that led to the purchase of Pepkor by Steinhoff, and then the listing in Germany of Steinhoff. In 2015, a year after the deal happened to buy Pepkor, Steinhoff then went and listed in Germany, and to do that, it had to make various kind of claims to the Reserve Bank about how true its financials were. And we now know that Marcus Jooster had rigorously fixed the financial statements. So it was a complete fiction. I mean, 106 billion rand in fictitious transactions over more than a decade. So the financials that Steinhoff had gone to the Reserve Bank and said, these are all accurate and true, and based upon this allow us to take money out the country. That's dubious at best.
Okay, so I mean, this is all about transactions that happened 10 years ago. I mean, it really shows you how big the shadow of Steinhoff is.
Yeah, I mean, it's cast a huge shadow over the country, I think. I mean, Steinhoff has been the definitive company that shaped the corporate sector in many companies for a long time. I mean, that shadow has hung over ShopRite, where Christo Vissa is still one of the large shareholders, over CAP, which is an industrial company as well, and PSG and various other companies were sort of in that Stellenbosch network, and to some extent became collateral damage of this, and are only still now recovering. I think Pepkor is perhaps perhaps the most fundamentally affected, given that Steinhoff does still own about 30% of it.
How difficult then is it going to be to get this block kind of lifted? It could be quite some time. I mean, quite a long time before it's sorted out.
Stephen, I don't think it should be. I mean, it's certainly, like you said, it's happened a long time ago. It has taken the Reserve Bank way too long to investigate this. I mean, they did eventually act about 2 or 3 years ago where they froze certain assets of Marcus Joster's former girlfriend, Bodie Woodendal, and certainly they froze Marcus Joster's house as well in Hermanus. And, commendably, you can say that they were one of the first state institutions to act in this case. But still, to investigate transactions that are, many, many years old, to the extent that you are freezing out commercial activity of a company like Steinhoff, which needs to repay debt, that is just, you can't do that. It just chills commercial activity at best.
I hate to say it, but could there be a challenge to this decision? I mean, based on what you say?
Yeah, absolutely. I think Steinhoff challenged the Reserve Bank on various other tranches of shares that it had frozen, and that case was eventually settled. So you can imagine that it would definitely look to challenge this as well. And at the very least, you could say to the Reserve Bank, well, hurry up your investigation and figure out what you're doing, because we can't be stuck in a situation. Steinhoff still has debts it needs to pay, massive debts, which is why ultimately the company failed. And it needs to repay the creditors, so it can't just be stuck in this limbo, this purgatory for many years.
The entire Steinhoff saga is so tangled. I mean, 7.5 years since it collapsed. These transactions go back 10 years. Any idea on how long it's going to take all of this to sort out? I mean, obviously, Rob, we know this. It takes more than one mini-series to sort out.
Yeah, for sure. It'll take at least 2 mini-series. But I think it does. I mean, these are complicated transactions, I suppose, so unraveling it does take a while. But essentially, the essence of dealing with the fraud has now been handled by the company. It's put the claims behind it. I think the corporate sector is kind of ready to move on. I think there's a lingering criminal trial against Stian Grobler and various other people in this case. So the criminal action is still going to linger, and I think that'll keep it in the front pages. But I think for all intents and purposes, the actual commercial business of Steinhoff is pretty much done and dusted.
One presumes all the shocks are done.
I hope so. You'd imagine so.
Rob Rose, thank you very much indeed. Editor at Currency and author of the book Stein Heist.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
On the next Money Show, the outgoing Group CEO of Old Mutual, Ian Williamson, will take you through the insurance company's financial results. Warren Ingram, personal finance expert, co-founder of Galileo Capital, about great steps for making the best financial decisions when you have children. Then we'll take a quick trip around our continent with Dr. Otendo Hundingi, founding director at Tribe Africa Advisory, also author, of course, of the book, also of the book, Rumble in the Jungle Reloaded. Also analysis of all of the top business news of the day.
The Money Show.
Business Books.
Well, of course, lots going on around development. You'll know, of course, about the ongoing debate that we have around foreign aid, whether foreign aid works or not. We'll talk about that in a moment with Dr. Lumkile Mondi, and he's been looking at that as well. Good to hear from you this evening as well on 011 8830702 and 021 And, of course, plenty to talk about tonight. You may well have a view on the business of foreign aid, as some people refer to it, but also on what works and what doesn't. So, yeah, all of those conversations to come, and, of course, we'll be focusing on that in just a moment. But also, don't forget, we'll be looking at the business of executive recruitment in a moment with Andrew Woodburn, because that, of course, is a fascinating conversation, and particularly tonight we'll be talking about this. All right. Well, you'll know, of course, about the ongoing debate around whether foreign aid does help poorer countries develop, whether there are better ways to stimulate development in countries that have not yet fully developed. In fact, last year, the authors of the book Why Nations Fail won a Nobel Prize for Economics for their thesis, which looks at how countries that enable innovation have developed, those that don't have not. Now, in the middle of this comes a new book. It's called Poor Economics, A Radical Rethinking of the Way to Fight Global Poverty. It's by Abhijit V. Banerjee and Esther Dorflo. Dr. Lumkile Mondi, you'll know him, of course. He's a lecturer in the School of Economics and Business Science at the University, at Wits University, joins us. Now, Lumkile, good evening. So these authors looked at case studies. They examined real data. What did they actually find about development?
Good evening, Stephen, and your listeners. They're really very much concerned about what we don't know. Many of us, we look at bigger issues, at macro issues. So this one looks at micro issues, studying the poor to understand both from different perspectives, the income dynamics that impact on the poor. Most economists in general, when you look at the income dynamics, we assume an S shape. That is, many of us, when we start work, Stephen, we low salaries. So we start from too low, and sometimes it goes up. But many of us, if you start too low, you may find yourself continuously earning a lower wage, which forms that S shape of being trapped at a low wage. The other way of looking at, with Daflo and Banerjee use, they argue that income dynamics are L-shaped. That is, everyone will eventually converge to higher levels of income. And they do so by looking at the evidence that look at hunger traps, health traps, family size, educational traps, as well as entrepreneurial technology trap. So they're looking very much at micro level in comparison to what we talk about in the show, where we are talking about macro issues, the bigger issues.
So does this then help us find better ways or to improve the ways in which you can stimulate the development of countries?
So in this case, really, is focusing on what we don't know about the poor. Many of us, we generalize when you talk about the poor. So their articulation here is that if you look at the poor, they've got a lot that is going on. In a common language talk among Xhosa, they will argue that the poor bagovisha. That is, they get on with their lives, given the fact that many of them don't have access to basic things. In the South African case, we all know that, for example, things like water, things like electricity that we complain about here in the urban setting, or even roads for that matter, that for them, they've got to navigate through all those challenges. And in doing so, some of them do improve their livelihood and see their status changing by navigating these complexities, which in many cases, many of us assume that water is accessible, accessible, roads are better, etc. But the poor don't have that. But they can get going. They can move from that trap of poverty and improve their own lives through their own means that these two scholars, Banerjee and Daflo, tried to explore.
So, I mean, are there particular lessons for South Africa in this?
Very much so. Remember, in South Africa, the slogan, particularly from the ANC, is always been that we'll do things for you. So the common sort of Zulu language that's being used, that, or Sotho terms, that ANC kaudirela. ANC will do it for you. So, for example, we'll provide housing for people, we'll provide free electricity, free water, etc. So our understanding of the poor is to disempower them and make them believe that it's only through political processes where their lives will change, instead of making it easier for them by creating employment opportunities and going on with investing in infrastructure so that the poor can find ways of making things happen for themselves. So therefore, in the South African case, it's created a dependence whereby people are always looking up and deferring to government to do things for them, other than doing things for themselves. As Daflo and Banerjee present, that, you know, look at the poor, in the absence of government, they get things going. They go on. Of course, some of them will come up and have income rising. Others never do so because of other problems.
Okay, so then I suppose the lesson for us would be to basically enable poorer people to do things. So it would be about improving, as you say, infrastructure. It would be about working with them rather than against them, or rather than doing something in parallel to them.
Absolutely. So, for example, I mean, we remember many of us who grew during the welfare state times. Things like education should be accessible. Health services should be accessible. And so because those are very important steps to change lives of the poor. Like many of us have seen that even though it was not good offered by the apartheid regime, we're able to access it. And when opportunities opened up, we're able to explore those opportunities. And today, many of us have moved from poverty trap to a better life. We are now middle class, and we're fending off against any tax increases that government has introduced, which are critical for government if it's going to have to build those steps or provide the ladder for the poor to climb to transform their lives. So it is this complexity that we don't sometimes appreciate, that if a capacitated state, a capable state that can provide that ladder and make sure that education, health is accessible to the poor, that ladder could be climbed, and then moving from low income or what they call poverty trap to better life, and therefore improve the livelihood and get their children experiencing a much, much better quality of life than their parents, as we've seen with my generation, which is going to be very difficult with the 2000 generation, where the post-apartheid democratic regime has removed the ladder completely, which could be climbed by the poor, with all the rail transport infrastructure collapsing. Of course, we know about the water as well as electricity. So the removal of that ladder basically has pushed the poor in South African case much deeper. Which in fact, Daflo and Banerjee argue that if you provide those, then it's up to them. They can be able to come out of it and improve their livelihood. But in our case, in the absence of that, then we're going to see many South Africans getting poorer as every year passes by.
Different countries have different features. Do you think the lessons, I can't recall if they did much of their research in South Africa, but obviously lots of people have been studying this in India, for example. There's a bit of a debate around how many people India has moved out of poverty. I see quite a strong debate in some ways. But do you think the lessons from this are universal, or are they specific from location to location?
I think some of the lessons can be used. So you can use some of the things and make them hybrid to the specific local conditions. I think overall the lessons are very good. They can be universal, but they need them when they're applied. They need to take into account the real material conditions that pertain in that particular jurisdiction. And for example, which in the Indian case, in different states, for example, they will look at agriculture as an engine for economic development, whereby credit to farmers is offered at a far lower cost of borrowing than they would in the market. So there's a market distortion. The idea being that you want to change the lives of these subsistence farmers to move from subsistence to commercial. You do that by providing a cheap money, and over time as they move up and become commercial, then they can access fair and competitive money to the established financial institution. So through those lessons in provinces like Uttar Pradesh, where we've seen quite very important improvements, particularly of the rural poor in India, using agriculture as a base for improving people's lives, that they've worked very, very well. Very well. Will they work in South Africa? Probably not, given the risks that relate to South Africa being quite a drought area. We know that every 5 years in South Africa, at least, we experience a very harsh drought levels. And in that regard, farming or agriculture in certain areas is a very, very risky exercise. When it's good, it's extremely good. When it's bad, it can take you out of business.
I suppose, what we're also seeing is quite a big debate around how we understand development, and also with that is sort of foreign aid. There's a big debate about how we understand that. It does seem our understanding is changing.
Well, understanding is changing, and it's very, very scary, particularly in the current geopolitical space, where you can see that there is basically taking away a lot of the responsibility responsibilities away from the state to the private sector. And we all know that the state had emerged to try and play as an arbiter in making sure that capitalism that we all know that we're talking about with Rob Rose some few minutes ago in relation to Steinhoff, that one of the most interesting dynamics about capitalism is its creative destruction, that companies emerge and they die. But at the same time, there is unequal distribution of profits, as Marx had argued historically. And that, of course, leads to high levels of unemployment and low wages, and therefore deeper inequality. So the state had to come in and address these problems of deeper inequality, of unemployment. And in the current geopolitical space, including South Africa, where the private sector is being seen as a major player to do what historically is done by government, there is a danger that we may deepen the position of the poor, because suddenly all goods and services are rated. So you have to pay for everything. And in doing so, those that cannot afford won't have access to those. So we lock them out, we trap them, and they remain there, poverty-stricken, with no access to infrastructure, no access to basic services. And that's the biggest fear that I'm worried about in the changing geopolitical space, but also in the South African discussion, where the state was hollowed out, and now we see the private sector as panacea to all problems, when in fact there are problems that still require public sector, particularly in a country like ours, whereby is high levels of inequality and a huge number of people that are dependent on the state. Therefore, by taking the state out, you're going to find yourself that are deepening the problems and therefore trapping society. And your growth is never going to rise beyond 1.2% because the majority are unemployed, they're trapped and poverty-stricken. Therefore, there's very few players that are productive economically, and therefore there will be no surprise of a growth trap because your productive resources are underutilized because of the policies that you've chosen.
Dr. Thungela Mondi, really appreciate the time, sir. Thank you. Senior lecturer at the School of Economics and Business Science at Wits University. The book is called Poor Economics, A Radical Rethinking of the Way to Fight Global Poverty. It's by Abhishek V. Banerjee and Esther Duflo. Both of them, by the way, won a Nobel Prize for their work in understanding poverty.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, there are different businesses and different ways to make money and different niches for people. And sometimes you'll find that people who you don't hear about very often are actually playing a very important role in stories that you do hear about. Andrew Woodburn is one of those people. He's a managing director at Amrop Woodburn Mann. You've heard him from time to time talking about the business of executive recruitment. Sometimes you'll see, as you might have this morning, a very big headline around someone going somewhere. I wonder, how did that happen? Well, if you want to know, Andrew is the person. But it's about more than that as well. It's about developing careers. It's about creating opportunities. It's also about providing an important linkage. When a company has a problem, they need someone to do something or a group of people to do certain things. They need that job spec filled pretty quickly. And they don't want to go through the process themselves. It takes too long, too expensive. Andrew Woodburn, good evening. Thanks so much for coming in. I really appreciate it.
Always good to see you, Stephen, and to your listeners.
How on earth did you end up in the recruitment business?
Goodness me, I'm an engineer and a development economist, and I'd studied some social sciences. And my father started our business, and I told him my whole life, I'm never coming to the family business. So my first piece of advice to all our listeners is never say never.
Yes.
I got there because the name was on the wall, because I was designing my career. And in fact, at a critical point in time, the global financial crisis happened. And I was a serial entrepreneur. Pre that, I'd been a corporate animal. And my father quickly took advantage of the opportunity and said, well, why don't you come and help me with some data hygiene and some this and some that? And I never left. So it wasn't by design, but I hope I've made it mine. And it was the passing of the baton from one generation to the other.
It happens so often in businesses, doesn't it? So how does it work? Someone is looking for someone to fix a particular problem. Maybe they need a general manager for the African continent, or maybe they need a general manager for Joburg. They approach you. How does the process go from there?
Yeah, so often what happens, and in the early days, my father used to tell a story, it either started as a network, so who did you know? And often it was the chairman or the outgoing CEO or somebody on the board that had a little black book, and they would use that. And that was what we called network executive search. And it's how the industry started probably 60 years ago in the USA. And then that became database, or believe it or not, newspaper recruitment. So, I'm a pre-internet model, and on Sundays you'd have the Business Times, and in those days you had big adverts about CEO of this and CEO of that, and well, that's long gone. And then after that came the research-based executive search model that now uses the best of technology, the best of databases, and of course the world's largest database that our clients have access to is a little thing called LinkedIn. But what we often find is the very best talent is not on LinkedIn or doesn't look at LinkedIn because they're very busy being brilliant. So a client comes along and they have a set of needs, and the real key is where does this talent, this experience, these qualifications, this journey sit out there? And that's where we come in. We are experts at finding, identifying, interrupting, inspiring that talent to consider what's next.
How do you find those people? So how do you know about someone who isn't, there's life outside LinkedIn, but how do you find that person if they're not advertising themselves? You'd obviously need to know certain industries, and I presume that's also why you find in your business certain agencies do recruit, concentrate on certain industries.
Yeah, so you get boutique agencies that might be specialists in the financial service environment, and they build up a track record of knowledge and contacts and people they've moved. And then they would fall back potentially on that network. But as I said, that was, generation one of our industry. The real art comes in being able to find the unicorn your client is asking for without having a network. So, for example, there's not too many mega fuel businesses in this country, but once upon a time, one of our fuel businesses needed a Formula One fuel specialist because they had taken over a sponsorship of a Formula One racing team for all those F1 petrol heads out there. And there are only between 5 and 12 of these kind of science people in the world. And it's not the kind of search that happens on a daily basis. We did that search. It was a fascinating search. We found some of these guys in the very wet portion of the UK where all the motorsport innovation laboratories are. And we had to both find out where they were, identify who they are, figure out how to interrupt them, get them talking, and then, of course, invite some of them to partake in a process to determine who our client wanted. So it's about the research piece. And what you need to really be is quite a generalist. You've got to understand all the sectors of the economy. You've got to understand what's going up and what's going down. You need a track record of who the winners were, where individuals and companies made mistakes and why those mistakes didn't pan out, and so on and so on and so on, so that when the client says to you, we need a triangle, you can both look fresh at the marketplace to identify triangles, but you can also go back in this breadth, this lateral thinking, to determine where have we seen triangles before, and are they capable of transitioning to this triangle and being successful? Well, that's just the identification of the talent. It's not necessarily the inspiration and the transition of the talent. And as you said, we see this on the front pages of our financial media. The CEO of here moves there, CFO of this comes to here. And these individuals don't just pop up overnight. They are crafted, and so now we go even further. Now I do career counseling and design. I do career management, and the wellness of key executives actually during COVID came to the fore, and so on and so on. So we provide a lot of services to top people, which your average man driving to work or at this point home from work might not even know exist.
Do you ever say to a company, I know you want a triangle, but actually I think you need a square here, and I know the right square who will be able to take this point, move their angles a little bit if they need to, but actually will do a better job for you in this way?
Yes, because we are in leadership consultancy.
Yeah.
So I'm not a recruiter. I like to see myself as a leadership consultant. So sometimes by questioning the client from a different angle, they might realize that what they thought they wanted might only be a portion of what they need. And maybe they should consider what I'm asking them in a different way, and it might alter or modify their expectations. That's the first thing. The second thing is that there's not everything that everybody wants available.
Yeah.
We're in a talent short environment, in which case you might ask for something, but it might not be available. The nice thing about that is the research shows what is available and what is not available. And sometimes some companies have to sort of either take the best they can get or be more pliable in what's available and what they thought they needed and try and fit a triangle into a square.
In some cases, the information that you need to know is obvious. So you need to know what the qualification is if you're going to do your Formula One thing. I presume you would need a Bachelor of Science at the least or whatever. But some of the information may not be so obvious. So I'm really trying to get to salary because you need to know what that person, what the ballpark figure would be, what would be attractive to them, what would insult them. That would mean they'll never speak to you again. How do you find out that information? You kind of need to know what they're already earning.
So sometimes I call myself a career doctor. And when Stephen Grootes goes to the doctor and the doctor says, well, what's this number in your blood chemistry, or what's that number in your heart rate, or what's this number in your blood pressure, even though you might feel, and let's take HIV for an example, that what's your status, you might feel that the question is of a very personal nature, and you might think that an individual would not be forthcoming about that information. In our industry, of course, if you're working in a listed environment like I do a lot, in many cases, the CEO and the CFO's remuneration is actually specified in the annual report. But having said it, the easiest way to do this is the client knows at these senior levels what they are willing to pay or have a band in which they believe the right candidate would sit. More than that would be too rich. And they would all, have eye-wateringly looks at each other. So they kind of understand, let's say, what the bullseye looks like in terms of REM. And because I've been at it long enough, one of the key elements is that the people I speak to and my firm speaks to understand that if we break confidentiality with them, then one, we're not going to work tomorrow, and they will find out. So it's often on a particular opportunity, people's remuneration change, but in many cases it's in all our interests that we just play open cards. Because there's no point in me bringing a unique opportunity to something that underpays 30% of what they're already earning. But we have to have frank, confidential and open engagement to understand where are these levels, right? And are they in play or not?
We're speaking to Andrew Woodburn tonight, Managing Director at Amrop Woodburn Mann. Everything you wanted to know about the business of executive recruitment.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
Talking to Andrew Woodburn tonight, Managing Director at Amrop Woodburn Mann. How does the business of executive recruitment work? Andrew, I love that really high-profile movement stories. I mean, I feel like a sports reporter. Kenny Fihla has accepted a deal to go from, Standard Bank to Absa. What goes on behind the scenes in those deals when that happens? I mean, who phones who for a start?
So often, and a lot of people think maybe the client will reach out to the candidate, which does happen from time to time because some industries, everybody knows everybody. Yeah. And banking is one of them. It's a small industry compared to, let's say, the City of London, where there are experts who may never have met each other in their careers so far. But here, at the top of the pyramid, many people know each other, whether they've been to a conference together, whether they work together in their early career and so on. But the problem with the direct approach model, in other words, that old network model, which some people still think is how it's done, is it does put individuals at risk. Because let's say the chairman of Bank A reaches out to the executive in Bank B, and it does work. The problem is if that gets out, Bank B will say, that chairman is stealing our people and could generate bad blood between Bank A and Bank B. Not what you want. You want to, in a small market, avoid a talent war. So it's not appropriate. But what happens if the chairman invites that executive to come and have a conversation and the executive doesn't get the role? Right. Now the executive may have thought, well, I know chairman of Bank A, I've got an in, or I'm the one because I've been invited. And meanwhile, it's always a competitive process. And therefore, if they don't get it, in fact, that personal relationship might be damaged irreparably. That's only the dynamics of the who goes first and who answers the phone. But then there is a whole bunch of other things that our market has to take into account in a little thing called governance. So is a process run appropriately? Do all comers, and by that I mean best of the external and best of the internal, have a chance to compete? Because let's say you're at 702, Stephen, and let's say the CEO of Prime Media slot is available. And let's say you think you can get it, but let's say you're not given the chance.
Yeah.
What does Stephen think? Stephen thinks, well, they don't think I'm good enough. I'm not the anointed one. Should I stay because they didn't even see me? And so, in fact, there is as much importance to how internal or known candidates are handled as approaching the best candidates in the marketplace for the role. And the best governed and independently facilitated process is when best of internal and best of external are brought together in an independently facilitated process where they compete against each other and the client is then able to pick. And this is the important part, the very best candidate by merit against their set of requirements. And now you're flying.
And that's a process you would manage?
Yes, so we facilitate the entire process. There is both the science to it, which we've discussed, the research of how to find and identify the top candidates, and then there's the art of it, is keeping candidates safe, because not everybody's going to win.
Yeah.
Often you might have a short list, in other words, those who are both capable of doing the role and currently interested in competing for the role. And let's say you've got between 3 and 5 in the marketplace, you're only going to get one winner.
Yeah.
But we want the other 4 to have had a growth experience competing for a wonderful opportunity, even though they didn't get it. And therefore, they were both better now than they were because they had a chance of reflection, plus confidential and safe, that the role they are currently executing remains their role and they can carry on being brilliant where they are. And that is an effective and successful search, both for the client, they got to see very good people, and for the candidates, they got access to an opportunity they probably wouldn't have got wherever they happen to be. But if they don't win, they can go back to work tomorrow knowing they're safe and continue to be brilliant where they are.
There must be a lot about life that you learn in this game. You'll see things happen to people. You'll know, for example, this kind of person, and I saw someone like this 10 years ago, and they went into this job and actually it didn't work, or it did work, or I never thought that that would work, but actually this kind of thing needs this kind of person. You must just see a huge amount about life very close up.
Absolutely. We are very much, from a confidential perspective, personal consultants to our candidates, strategy consultants to our clients. In some cases, we're joining the dots. This is an obvious candidate for an obvious opportunity. And how do we bring those two together at the right time? And that means we are exposed and truthfully and very respectfully to people's inner secrets.
Yeah. Stuff they don't tell, stuff their partner might know.
100%. In fact, in some cases, some of these individuals are not even able to talk about these things with their partners for a number of reasons. Number one, the partner might be at a competitor.
Yeah.
You know, how many CAs have married CAs? And one is in audit and the other one is now a CFO in a business. And in fact, they should Chinese wall between them at home. Pillow talk. No, thank you. Not allowed. Right? And so we've come across things about people considering immigration. They've either been divorced or getting divorced. Personal wellness. Issues where great senior leadership in our country have health concerns because they're under immense stress, right? And therefore, how do they navigate all of this? So we truly become personal consultants to individuals. And now we've got transitions into the board. At what point do they change their careers? I mean, just as a matter of interest for your listeners, I say most, and these are people in the executive trajectory, right, have 3 careers. Did you know you have 3 careers, Stephen? Your first career is a technical career.
Yeah.
You might have studied to be a journalist. You might be an engineer. You might be an accountant. You might be a doctor. And you are practicing what you studied. First career, technical. Your second career is your leadership career. So how do you take people with you, strategy, and of course the measure of your leadership, results. And then you have your third career, which is more philanthropy. So you might become an independent, non-executive director or chairman, or you might lead a charity, or you might build a foundation. And so each of these periods in your trajectory needs custom design, custom execution. You need to train for winning it and executing it. And what works for number 3 probably wasn't what made you successful in number 1.
Andrew Woodburn, thank you for coming in. Really appreciate it. Managing Director at Amrop Woodburn Mann, the art of executive recruitment, managing a career on The Money Show.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
Well, that's it for The Money Show tonight. Plenty to come tomorrow. Don't forget financial lessons for your children from 7:30.